Welcome to The Peel. I'm your host, Turner Novak, founder of Banana Capital. Today's guest is Kevin Hartz, co-founder of A-Star, Eventbrite, Xoom, and Sauron. Kevin has been building and investing in technology companies for over 30 years, and we talk about how the industry's evolved, why he calls AI the mother of all bubbles, why we're still early, and lessons today's breakout AI companies can learn from those that survived the dot-com crash. Kevin is a big proponent of backing young founders. A significant percentage of his latest fund at A-Star is invested in teenagers, and he shares how he identifies outlier talent so early, from seed investments in Airbnb, PayPal, and Pinterest, to many of today's hottest AI companies. He also shares the insane story of investing 100% of the proceeds from his first startup into PayPal's seed round, how PayPal's early fraud systems inspired Palantir, what he learned from the PayPal Mafia, from Peter Thiel, and what makes Founders Fund so special. We also talk about how he and his wife recently had 2 babies, 5 months apart, using genome editing and surrogates. I also want to call out the obvious that Kevin is a co-founder of Eventbrite. If you've been following the company, they're in the middle of closing an acquisition, selling to Bending Spoons. For legal purposes, we had to cut most of our conversation related to that, but hopefully Kevin can join the show again sometime and we can run it back. A quick thank you to Ramtin Naimi, Navya Gudimetla, and Bennett Siegel for helping brainstorm topics for Kevin. A reminder that I publish 2 episodes of The Peel every week, exploring the world's greatest startup stories, just like this one. Check out the back catalog of over 100 episodes and tune in next week for conversation with Marcelo Lebre, co-founder of global HR platform Remote.com. Now, let's talk to Kevin after a quick word from Numeral and Flex. This episode is brought to you by Numeral. Numeral is the fastest, easiest way to stay compliant with US sales tax and global VAT. It's easy to set up, and they automatically handle all registrations, ongoing filings, and their API provides sales tax rates wherever you need them with all the integrations you need. Numeral supports over 2,000 customers in both the US and globally, and they pride themselves on white glove, high touch customer service. Plus, they guarantee their work, and they'll cover the difference if they mess anything up. They're fresh off a fundraise, closing a $35 million Series B from Mayfield, which they're going to reinvest into building an even better product. If you want to put your sales tax on autopilot, check out Numeral at their new domain, numeral.com. That's numeral.com. for the end-to-end platform for sales tax and VAT compliance. This episode is brought to you by Flex. It's the AI-native private bank for business owners. I use Flex personally, and I love it because they use AI to underwrite the cash flow of your business, giving you a real credit line. The best part is 60 days of float, double the industry standard. Flex has all the features you'd expect from a modern financial platform, like unlimited cards, expense management, bill pay that syncs with your credit line, and their new consumer card, Flex Elite. Flex Elite is a brand new ramp-like experience for your personal life. A credit card with points, premium perks, concierge services, personal banking, cards and expense management for your family, net worth tracking across public and private assets, and a whole lot more fully integrated with your business spend. One card for your businesses, one card for your personal life, one card for everything. To skip the waitlist, head to flex.one and use my code Turner to get an additional 100,000 points worth $1,000 after spending your first $10,000 with Flex Elite. That's flex.one and code Turner for $1,000 on your first $10,000 of spend. Thank you, Flex. And now let's jump in. Kevin, welcome to the show.
Thanks. So excited to be here. Thank you, Turner.
Yeah, I'm excited to have you. You've been investing in and building technology companies for the past 30 years. A lot of stuff we can talk about. I think probably the most interesting thing to me is just like, how have things changed, in your opinion, over the past couple decades?
Well, Turner, yeah, I mean, I have been mostly building companies, over that period of time, since the mid-late 90s. And then it's kind of like, I don't know, it's when you're not as effective building anymore, you invest maybe? No, I'm kidding. But how has it changed over time? Like the thing that I will certainly say is that everything, like in the structure of how we do things today, is almost like identical to long ago. The difference is that it was such a smaller industry. Like, I can't believe how much of a cottage industry it is. And, in hindsight of now seeing like the just sheer breadth and growth of this market. The tech industry was this niche-y, small little area. And now all of a sudden, it just covers so many different things. Then when you think about venture and investing, without a doubt, the power and the authority or so on was in the hands of the venture capitalists. They just had these incredibly sort of aggressive term sheets and terms, and could really get away with that. And that's changed dramatically as well.
What do you think caused the change? Is it just there's more funds? So like if you give me a bad deal, I should go to someone else?
Exactly. It's a supply and demand thing. There is, much more capital, more capital sources, and somebody's, as you said, will do things, to the terms that are much more fair. So, you see valuations rise, but also you don't see these ratcheted terms of, 3x liquidation preferences or things that used to be fairly common in the past.
So even in a down the fairway seed round, companies raising $5 million, it's like a good product in business. They would still get like a 3x liquidation preference from a good fund.
I guess I'm like giving an example of a ratcheted term. It really depends from deal to deal. It was much more bespoke. Here in this day and age, we just do these like quick safe notes, and they're all fairly standard, but everything was kind of cooked up individually to its own situation. And that situation was usually very well controlled by the investor.
So, and it was probably that it was a lot harder. Like you couldn't just go on the internet and type in best seed investors and get a list of like 1,000 people. And you're probably connected with some of them. Some of them probably take cold pitches, and you get 100 meetings today. I don't want to say it's easy, but probably way easier to meet 100 investors today than back in the 90s.
Yeah, I don't even know if you could find a list that long back in that time period. Then there is the sort of oligarchy of venture firms, the like Sequoias and Excels and Mayfields and so on.
Is there any other ways you feel like the broader venture industry has changed? Like, do you feel like people behave any different, or like, are we smarter, maybe dumber than we were, in the past? I don't know.
You just see different behavior primarily motivated by the amount of competition, which by the way is good. And I'm not, I'm actually an advocate for an environment such as this because it's great for founders. I guess if I put on my A-star hat, it would be nice to have not as much competition out there. But, this is where innovation comes, is when you have relative plentiful capital available for these businesses to experiment in a lot of ways that in previous eras and periods and so on, that the money just wasn't there. And now you see financings in all these different countries of the world and all these different segments of of innovation and technology, and so that's really, really great.
Yeah, one thing you mentioned, you kind of like hinted the current environment, and I guess some people would say like today, are we in an AI bubble? Like I think I saw a tweet from my friend Finn Murphy saying he saw his first 1,000x ARR round close, which is, I think we're like round tripping back to 2022, the very beginning of 2022, when that happened the last time. Do you think like are we in an AI bubble, or how do you feel about the AI bubble if we are in one?
Well, we are in an AI bubble, and I would call it the mother of all bubbles. It'll be a bubble that, makes every other bubble look like a tiny, tiny, little bubble. we can call it a super cycle is a good description of it. However, two things. One is we're still in the very, very, very early stages. Whereas like the Wall Street Journal and New York Times and everyone else is saying, oh, it's going to pop any minute and CoreWeave's down 50% and it's already starting to happen. And, two, I think it's really good. And I'm, when I say bubble, like I always see capitalism as like a pendulum. It never just kind of stays right in the middle. It's either swinging, too far towards, like the bust side or too far towards the boom side. And we're on the boom side, right now. But to the point earlier, we're in the early stages. And the reason I say that is that we're still at the very low layers of, the innovation revolution here in AI. And that is, if you go all the way down deep into a system, it's, the chip, and NVIDIA's, still cranking along and selling chips. And that just kind of lays the groundwork for all the great things to happen on top of it. Of course, building data centers around that. But then, the foundational models, Anthropic and OpenAI, not to mention all the existing players, have these, are building these foundational model platforms. But what I'm most excited about in what we've been, investing in as aggressively as we can is the application layer. And we're just in the early innings. And so, if you can kind of picture things coming up and up and up, we're now starting to see, companies like Cursor and Cognition and the code copilots really ramping up as these like kind of first enterprise segment. And you're also seeing, Decagon and Sierra in the customer service world ramping up. But there's still so much more to be done. And, there's still so many categories to happen that, again, I think this is going to, or I know this is going to continue for some time.
So those are like famous last words, though. It's like, we're still early. Like this has more room to run. What makes you so confident? Is it just that like not enough people are using it and it's a useful technology and it's clear that like this is what the future of all software is going to look like, where it's, quote unquote, applying AI to like do work for you, and we're only at like 0.1% penetration and it's going to get up to 100% of software. So there's just like 1,000x room to run or something. Like, is that basically the argument, or is there something more than that?
Right. I mean, like what are these chips producing? What are these foundational model companies producing? It's the application layer. And you look out at all the companies throughout the country and the world that can lower their OpEx and dramatically decrease things through, kind of BPO replacement or, just all the other areas of automation. It's almost embarrassing how far along we are. Like we're just, just in the like first inning, or maybe we'll say second inning, not to be too bullish.
Yeah, fair. We still got at least 80% of the game yet to play, maybe 70% of the game yet to play. So then when you're investing today, like you run A-Star, we can talk a little bit more maybe about like the kind of theses you guys have, where you fit into the market, but how do you kind of separate what is maybe smart to be deploying capital into today versus not deploying capital?
So A-Star is a pre-seed and seed fund primarily. And we're the $300 million fund. We're just wrapping up our second fund. And, for us, it's really a focus around talent and people, because at those stages, what else do you really have? You don't have working products and things of that nature. So we're really making bet on the right people. And so we hope we can continue to deploy capital, towards that. We backed Decagon, for example. We seeded Decagon, which is this customer service, AI customer service rep. And it's Ashwin and Jesse, the two co-founders, are extraordinary people. And that's really what's lifted and drives the business.
Is the people, the founders and the team?
Yes. And, they set the cadence. They, find that right talent, in like kind of in the notion that they expect to, hire towards, like their VP of engineering or their new VP of sales, like all incredibly driven, like fast builders.
So I think if I was talking to pretty much anyone else and they told me this, that it was all about the people and the talent, I'd be like, every VC says that, you're full of shit. But when I look at your track record, it's like you did this with Pinterest, Airbnb, PayPal. There's probably a bunch more that I'm forgetting that they're in my notes. You've done it so many times. So how do you do it? Like, how do you find really good founders like super early like that?
Well, I think like I was lucky that fairly early on in my career, Peter, like I invested in the seed round of PayPal, reconnected with Peter Thiel when he came back to the Valley. I had known Peter as from student politics at Stanford. And, he was an extraordinary person. Like at Stanford, people are smart. And then there was like Peter, who was, like head and shoulders above that.
Am I remembering that you guys were kind of like opposite sides in the political spectrum? Am I remembering this right?
I was chair of the Stanford Democrats. And,
okay. And he
he
like edited the Stanford Review, right? Yeah.
Yeah.
Interesting.
But I mean, like it was at a time where some of these issues were boiling, but people actually, could listen and respect other opinions, which makes me sad today, but that's an aside. But Peter was just extraordinary at bringing, his team together. And so I got this amazing lesson. I'd come off a very modest sale of a company. We were providing high-speed internet access to hotels in the mid-late 90s, and a public company called LodgeNet acquired us. And I had no large fortune, but, some cash and put as much as I could into PayPal.
What percentage of the exit proceeds, post tax and everything, do you think you invested in PayPal?
I think it was just like 100%. Like, what else would I do with it?
Yeah, fair.
Yeah.
Were you not thinking like, oh, I should, create a portfolio of angel investments, or was it just like, this is an incredible team and insight and market and time, and I'm just going to give them all my capital because they're going to build something amazing?
It was the latter. And, I was at an age where I could, take these shots on goal. And the status quo at the time was like, oh, you should always put aside, most of your earned income and maybe put some into mutual funds or something. Like there were all these like, kind of stock gurus and money managers that would tell you how to save up, and that in, 50 years you could have enough to retire. And that just wasn't of interest. And maybe that's where like my early VC self was showing.
Yeah. I mean, if you're thinking about, if you look at the data on the asset classes as a whole, venture typically outperforms like on average. And then there's a massive skew too with inside venture. Like it's like the highest performing, widest variance. So you either make a lot of money or you lose it all. So if you're really thinking about, I'm trying to make a lot of money here, like it's probably the smartest bet if you know what you're doing.
Yes. I mean, the venture side, you get a number of shots on goal, and it's almost better to take, those shots. In my case back then, I guess I uh, went for it all at once, and it just worked out. But to the point, I think it was like more of seeing this team together and seeing what an incredibly functional and the ingenuity of that team and the things they did to win, like were just above and beyond, and like they just outsmarted, you know, everyone like kind of on every plane when they were expected to not be able to do that. And you see why now today, when you look at the caliber of all those people, they're all extraordinary in their own right. And, what a special period to have them all together.
Yeah. So I think I was probably 6 or 7 when PayPal was founded. So I do not remember what it was like at that time. So was like the PayPal team kind of today, where it's the PayPal Mafia. Most people listening to this have probably heard of that. Were they not kind of as highly regarded back in the 90s? Like, it was just kind of a bunch of random guys and nobody knew what they were going to become?
Yeah, I mean, completely disregarded. In fact, what happened is that you had the dot-com boom in the late 90s. PayPal or its predecessor started in, I think it was 97, and they launched the PayPal product, I think, at the end of 98. They pivoted a few times and then, really took off in 99 and beyond. And then, so when they were really cranking, it was 2000, and the internet economy was like in overdrive, and everything looked like it was incredibly great. And you could do no wrong in the internet side. And then the bubble burst, and they were almost seen as anonymous, or they weren't considered. It was just considered like they would go out of business, or that they wouldn't make it, or they were kind of counted out, when in fact, it was a substantial business, and it was growing so fast and doing so well.
And so, are there any parallels between now and today? Like, when you look back in the same time periods, like, I have a friend who, there's a certain category of AI company, and he's just like, every single startup in this category is working. Like, everyone is ripping, and all my friends are invested, and they're like, oh, blank, you missed out by not investing in this specific category. You got to put some capital to work. And his thing is like, that is bad. Like, I'm scared that everything in the category is working. So I don't know. It's kind of like that story really resonated with me. I was like, man, like, there's definitely something to that of like, does like the success of certain categories today kind of mask or hide certain under the radar founders, or like, do you feel like there's any parallels between now and today?
The parallels are very strong. That, these patterns kind of emerge. Like, maybe the difference is that there were a couple different PayPal competitors, copycats. And when the dot-com crash occurred, they mostly went out of business, or they all went out of business. But the businesses in that time period, if you recall, you needed, I guess you wouldn't because you were 6 or 7 years old, but like they needed like the infrastructure, like you buy your own servers and you fill up like your server cage. You'd go down to like South of Market and go into your cage and like, rack your servers up. And so things were expensive to manage and maintain, and there was like high complexity. And so now we can see this hypergrowth happen, like, say on the, coding co-pilots, you can see this rapid growth happen. And then the markets today are so much larger. Like, you have such a larger TAM of who you can reach, the number of developers, for example, that, you just see a group of players up and to the right. However, if I were to draw back, another analogy that it's maybe more appropriate is there are a number of search engines during the 90s. There was like 24 search engines and a few different that had been public or so on. And in the end, it was really just Google, like the almost last to market became the market leader. And the kind of lesson there is that, on the coding Copilot space, there's going to be an enormous number one, and then, significantly smaller number two, and then who knows what happens after that. But, that's about it. And so, like, the important thing is to be the market leader.
And so are you thinking about that when you're investing or building today? You're just like, can this be the number one in a category?
All the time. That's so relevant. I mean, in the next generation, it was MySpace and Friendster. I was an angel in Jonathan Abrams' Friendster. MySpace, had won the market, and then Facebook, the say last entrant came along and took everything away. So really ensuring that you're in that, and you don't want to be in the one that's not going to be positioned to win the market.
Yeah. How do you figure out if they're positioned to win? Like, is there anything you'd be dissecting, or does it come back to team again?
You got to invest in the next Peter Thiel. Really comes down to team. How extraordinary, grit, resilience, all these things. But the other side is, what you do want to find is like what we call this N of one effect, or N of one factor is, you meet a company where they're the only one doing something that seems pretty far afield and really weird. I always felt like Founders Fund was so good at finding companies like that, that if Sequoia, when they make an investment, you would say like, oh, that's so smart. Wow, I get it. Like how cool. If, Founders Fund would make an investment and you'd be like, what are they doing? That's so weird. I don't get it. And then, 3 years later, you'd be like, wow, and that's kind of the mindset. I think like Cyan Bannister I worked with her at Founders Fund. I felt she had that great sense of finding these like kind of weird things, but could see where it goes. She was a seed investor in Uber, for example. I didn't get in there till Series A. Or no, sorry, it's Series B.
Did you try before that?
No, I had spent some time with Lyft and kept looking at the numbers. And I was with Logan and I like secretly felt sorry for them. I was like, oh man, this is going to be a tough business. And I was very wrong on that one.
Yeah. What do you think you got wrong?
I should have thought through the capital light model more appropriately. And then certainly the size of market. But I wouldn't say Series B is later, but not. It was $300 million versus I think the market cap's what, 170 billion.
Yeah, that's usually my threshold is like 100x, post dilution, et cetera, like change in share price. If you can get 100x increase in share price, that's a venture investment. Like that's kind of the target. And you get it all nuanced, maybe 95x counts, but like if you get into something and it's up 300x, like that's pretty good. Like that's hard to do. That most people, 99.9% of investors will never get that. So, and one thing you mentioned Founders Fund. They're really good at finding these kind of weird, wonky things. I think you kind of joined early on it was maybe like a fund cycle. I think you were there for like 2-ish, 3-ish years.
Mm-hmm. Yes.
What was it like back then? Like, was it pretty much the same, or has it changed much?
I mean, it's such an extraordinary, group of investors. It is weird, like it's like I grew up in the East Bay near Berkeley, and we used to call it Berserkly. And like Founders Fund was like this like weird place that was so kind of, it was like counterculture and, the anti VC. And so it had this, and that just like gave it this like coolness around it. And then, like process and all these things that anal retentive people, neurotic people like myself, like hate. Like there was, no partner meetings and, like no organizing your list of deals. And it was, you know, like very much each individual go out and, kind of find, that next great company.
So how were like investment decisions made? Because usually you think your classic venture fund is like a Monday morning partner meeting. Maybe there's a Thursday. Everyone talks, kind of pitch. The founders come in and present, and then I don't know, you vote. Or sometimes it's just like a dictatorship. How did it work at Founders Fund?
There was voting, and it was based on number of, or check size. Like, so the larger the check, the more number of partners needed to get something through. So there was, so there's always some aspect that reels it back in. But the most important part, and what Brian Singerman would always say, is like he would always kind of like come up to you and sort of berate you, like, "Are you sure you have absolute conviction?" And you would lie down on the train tracks and that this is going to be bigger than Google, and I didn't maybe appreciate the berating as much at the time as I do now. Like that, you like if a individual partner at Founders Fund has like that high conviction, then like votes, all that is almost irrelevant to just saying, okay, like we'll do it.
And I feel like that's kind of the point of venture. Like the point of it is we are putting some capital into this pretty early like business or product or team, go up or down the list of like how early or late this thing is. And it will become one of the most consequential companies of all time. Like it's going to become a generational business. And we don't actually know. Like the statistics say that it probably won't. But if it does, we're going to make a lot of money. Like the fund will return itself multiple times over. And that's kind of the point. I feel like a lot of people maybe lose that. Like they kind of, it's more of like, oh, there's like people are blogging about this certain thing. And like, we know that all these other funds are looking at this. Like if we can just get in before them, then they'll mark us up and we'll be able to raise the next fund. And by the way, the product doesn't even work or like they have no customers, but we got markups, but who cares? No one needs to talk about that.
Yeah. While I was there, Trey Stevens and Palmer got together and started Anduril and, inside of Founders Fund. And that was extraordinary. I mean, it was exciting, but watching them go through the process and seeing, the company get off the ground was exciting, but now it's extraordinary in light of like, how far that business has gone in just these few short years.
And it's interesting, like when you just look back at the time they started the company, like you had, Google was signing a deal to basically provide cloud services for the military and employees were protesting it. Like we will not serve the US military because it's unethical or whatever. And just like, it was like the most contrarian possible position you could have is like, we're going to, and also selling to the government is like on paper, you'll talk about VC blog posts. Historically, it's like, the government moves slow. Don't sell to the government. They never make decisions. It's like all corrupt, et cetera, whatever. But then you flip it and you look at today, Palantir has like, I don't know, I'm sure they have some 9-figure customer deals with certain governments around the world, like enterprise software, like the beauty of just these massive contracts. So, I mean, same thing with Anduril. It's like, I'm sure they have some customers where they're making 9 figures. They have 9-figure contracts or probably will eventually. And just like contrasted today and back when they started, it's like so different.
Yeah. What's interesting is like, yeah, both Palantir and Duro were these like, contrarian beliefs rolled into companies, with Peter very much, involved in both. And and now the value of Palantir is just extraordinary, like of, how far it's come. And then, in the case of Palantir, it took, 20 years to then like really inflect, because like Palantir kept like moving along at like a good sized business. Um, and it was almost like kind of lying in wait of transformers and, this awareness of this being needed. And it had found the perfect audience of, government and so on to just spend those first 20 years, and then exploded as this AI boom has happened.
Yeah, and I remember there's even maybe like as recent as like 6 or 7, 8 years ago. Maybe it was like 2018. Someone would do a presentation of like, these are the most overvalued private startups. And Palantir was like always on those lists. Like it was always pretty close to the top of like, these is like an example of like, bubbles in the private markets and these companies are a zero.
For deployed engineers were called consultants and were a negative thing. And, it's just a company that does consulting and shouldn't get any kind of high, marks. So yeah, like and seeing that from like its creation, it was really based on one of the kind of currents that like pushed it forward was the fraud models at PayPal, which could, in a networked way, kind of find similarities like amongst, say devices or IPs or otherwise, and then, identify and find this kind of networked fraud. And that was like the inspiration, with Palantir as well.
Interesting. So like using just data of, broader internet usage, like pick up potential threats to a nation or to a democracy or to like civilians or the military, et cetera.
Correct. Yeah. Like Max Lubchin and the team would see that, a whole set of IPs had somewhat similar attributes or some tie, and then, transfer that over to discovering, okay, there's a terrorist cell and they used a phone over here and computer in a different country, and tie those all together and gain insights was like the original premise.
Interesting. So you think that the premise of Palantir started at PayPal?
I think so. Yeah. And in fact, that PayPal announced the acquisition, I had lunch with Peter, and he said that, he said like, I'm going to start this company and it's going to be kind of based on like similar to how PayPal models are used, to, like to find fraudsters. We can use them to catch the bad guys.
Interesting. I've never heard that before. That's crazy. I guess, well, you also sort of started a company off of insights from PayPal.
Yes.
Was it the very first company built on kind of like the PayPal platform or API? I guess I don't know the inside full story, but what's kind of the story with kind of getting that one started? It was called Xoom, right? Is that how you pronounce it?
Xoom, not to be confused with the video conferencing. Yes. Xoom is a money transfer business, much like a Remitly or Wise or so on. And, the business is really about helping immigrants send money back to their family overseas. But, how it began, my business partner and I, Alan, who went to UIUC and So he was in school with folks like Max Levchin and Libor and all these other. There's this like whole mafia of UC folks, and I had a conversation with Michael Moritz, and he said, like, the most successful companies are not just companies; they create industries. That they're like enormous industries sprout out from it, and certainly you look at Apple and the iPhone, and the App Store. Like, there's just an enormous sort of like universe created of value, which Uber and Airbnb benefited massively from, despite Apple's hefty tax on everything. And so when I saw the world melting down, in 2000, starting March of 2000, 2001, and so on, everything was kind of collapsing except for Google and PayPal, and like PayPal was like rocketing up. And so, the thesis was like, well, let's build apps on top of PayPal. And there was like a kind of mutual desire to do this by the PayPal team, because at the time they were like 99% relying on the eBay auction marketplace and they were concerned that Meg Whitman, the CEO at the time, would like shut them off one day, and they wanted to, kind of drive non-eBay GMV. So Alan and I we talked to David Sachs and convinced him to open up an API, and became the very first developers on that API.
What was that process like? Was this like 2001, I'm assuming?
Yeah, it was towards the fall of 2001. And in fact, like, I think we launched Xoom not long after 9/11, which, it's like .com plus 9/11, it was like a crazy, but, like, I guess I've always found that a time to be very sort of counterintuitively greedy is during these really terrible times, because, one is like you kind of can't fall off the floor, and, it's like this time where you really learn how to be scrappy and build like great bones to a company, and and it's the warm up and the run up to the next kind of accelerated period. So no doubt there were a lot of great companies that were started or came out of that like kind of downturn period, as the same as with 2008, 2009, as the same as with that 22, 23 period.
Yeah. So was there anything that you did differently between Xoom and the first company? I think it was called Connect Group, the one that you sold to there was the hotel internet. Like, okay, so like, what was your approach second time? Or maybe there's multiple companies in between here that I'm missing, but what was the difference between the first time and with Xoom?
Well, the first time with Connect Group, there were 5 founders. We had hardly got off the ground. We'd hardly really built, we didn't really build a business. We had one installation, and, then a suitor came calling, and we went with them. So I don't know. I honestly didn't learn that much, from it.
Why did you sell the company then, if it was still so early?
I think we maybe felt there were greener pastures, and, they came calling, and it seemed like a good option but I don't know. I don't, at that time, you didn't have like all these great podcasts or, material Substacks to read up on, like when you should exit your company and when you shouldn't. And
so it's basically just like you thought it seemed like a good deal to take. Just risk reward seemed good, make some cash.
Good enough. Yeah.
So then obviously you didn't do that with Xoom right away. I think you guys sold it like 13 years in.
Yeah. Well, Xoom was, we were founded in like 2001-ish, into 2001. We went public in 2013 and were acquired by PayPal in 2015. However, in 2005-ish, I moved on to the board out of the CEO role.
You've done that like a couple times. I know we're going to talk a little bit about Eventbrite. I think you did a similar thing. Like, how did you know it was the right time? Like, how do you think about when you kind of shift away into more of like a chairman role?
Yeah, I think like in general, like the best practice for it is really spending time with those that, mentors, people you respect, to hear through, is this a net positive or net negative for the business? Like what are the trade-offs one is doing?
So it's kind of like, is there somebody else who could actually do this better than I can? And let's plug them in.
There's certainly that, yes. But, do always be aware that, it's if you have an outsider come in, it's rare that they'll have that founder quality. They may have great skills and leadership and building, but that, kind of founder variable would be absent. But we kind of got the best of both worlds with Eventbrite because it was my co-founder, Julia, who took the seat.
So then did you start Eventbrite around the time that you stepped down from Xoom? I'm trying to remember the timelines.
Yes. In fact, we, back to that period with Alan, when we were becoming the first to build on PayPal's new API, we built a whole range, like over a number of weeks or months, we built a number of different payment related applications. And one of them was like a very rudimentary ticketing application that, when I found myself with more time on my hands, was like this, took a look at the like admin and there was like volume and people were publishing events and nobody was touching the thing. It was just like running on its own.
Oh, so this was just like a little mock-up that you had built?
More than a mock-up. I mean, it was a functional application.
Did you just like take it and say like, this is Eventbrite, let's go? Or were you like, let's like rebuild this from scratch?
Well, with the two new founders, the founders of Eventbrite, Renaud Visage and Julia Hartz, and myself, we kind of took a close look at it and also would kind of debate maybe there's other things to work on or what do we do, but let's start working on this. And we just started to kind of iterate like the product. I mean, it seems like obvious or no big deal, but it was a PLG, it was a PLG product like at a time that there really wasn't much, maybe Netflix or something and Gmail, out there. And we would have this 24-hour dev cycle because Renaud was over and he was based in France for most of the year, hit a flat over there. And so we would, like I'd kind of work on product mocks and specs and things and file bugs and throw him over the fence and he would go after it.
You'd wake up and he'd have it fixed?
Yeah. And and we did that for a fairly long amount of time. I had felt like, we raised too much money for Xoom. And so the reaction to that is to like be, very like go the other direction. And so we kind of worked like almost 2 years on just kind of iterating and optimizing that.
And what like was or is Eventbrite for people who are not familiar? I've done like some research over the years, followed it, but I'm sure I don't even know exactly what like the core product and like customer base is.
Got it. It's really kind of ticketing for the rest of us, not for Madison Square Gardens or the large, football stadium. It's ticketing for everyone else, and it's it's simplicity, ease of use allows you to really kind of get the word out about one's event, but also around we like benefited greatly on lowering the cost of acquisition, because you would get these Eventbrite invites, and you would see these pages, Eventbrite registration pages, and that really helps spread the word.
And I think there's a significant chunk of people that run businesses on Eventbrite, if I'm remembering right. Like there are people who they just host a lot of events as sort of like how they make money and make a living. And I think you guys essentially just like take a cut, and then there's maybe some advertising revenue too once you hit scale.
That's right. It was kind of this religion for us to one, take very low fees as opposed to what you would see from the incumbents in the space. But also just this notion that we only take a fee if you actually make a sale. Was kind of like this religion at the time that was like substantially different than most of the services or so on out there.
Yeah, and I think I remembered you've said before in the past that when you did decide to raise money, it was kind of tricky because this wasn't like a well-known market. Like you couldn't Google, what's the TAM of this thing. How did you kind of size this and figure out how big of a company it could be?
Yeah, I hated this part because coming from Xoom, like, you could just get the bank, the central bank figures for remittances in the Philippines and India and Mexico. And you had this like very clear, enormous TAM and take your percentage of it. But in this case, it was like a kind of SMB audience. I would call them creator. Like it was an early creator audience, in those that, made their living with this type of craft. And there's, and this is now just multiplied. I'm on the board and we're investors in a company called WAP, which is General Creator Tools. Think of it as like Shopify for services. And, their volumes are now GMV is now in the billions. And, this is just the general notion that you don't do what your parents did, like, which is go to one company and work your whole career and get a W-2. Now you get a 1099, and you're like your own boss. And, but you need the infrastructure to do that. But that was like, Eventbrite was very much a kind of early version of that, or is.
And I know people listening to this are like, Turner, you got to ask them this. I know you guys recently, there's some news that came out. You had, I forget like what the phrasing around this was, but you're under an LOI or closing an acquisition, you're getting acquired. Not sure what you're allowed to say, but what exactly is going on right now with Eventbrite?
Yeah, so Eventbrite announced that it is being acquired by Bending Spoons, a Milan-based. I kind of describe Bending Spoons as kind of like a new age IAC. So it's sort of like a holding company. It's a number of different companies that are assembled together. And Luca has just done an extraordinary job of building that business. We just announced this happened, and because like of all the SEC regulation and so on, I can't like go into grand detail. until it closes.
Well, I did want to ask you a little bit more about, we kind of hit on it a little bit, but we didn't get too deep into it. So there's a headline, if you look at TechCrunch, when it's like a sensationalist headline, like, oh, this fund invested 20% of their fund in teenage founders. I think that's the headline, if I'm remembering it right. We hit on a little bit more. So that's a pretty big thesis for you at A-Star right now, is just finding people very, very early in their kind of professional journey and their building journey, and just helping them out, giving them some capital, seeing what happens.
Well, it's funny because like we didn't really seek it out. It's happening. If you're in the pre-seed market around, universities or the Twitter sphere or so on, you're seeing like the age has been dropping precipitously, whether it's through YC or whether it's through, like, I do a lot of work with Corey Levy, known him for years. And he's got a program called Z Fellows, and he backs dropouts. And it was always dropout from college, but in the last like 18 months, the like dropout from high school is like extraordinarily high. Then running into and meeting founders that, one of the Z Fellows was the creator of the the calorie counting app. And I think at the time when I met with him, he had something like 30 million in net revenue.
That's wild. There's like a bootstrap company, has not raised any capital.
Correct. He hadn't raised a dime. And, and he was and had this great, business he had assembled.
Yeah. It's interesting because there's like two sides of the coin of this. When you look at Facebook was started, I think Zuck was like 1920-ish, something like that when he started it. Now one of the most consequential companies of all time. On the other side, there's like a lot of cases you could say you're giving this 17-year-old or 18-year-old like, $10 million. This could end in absolute disaster. Like they have no idea what they're doing.
Like in some cases, like a Facebook or an Apple computer, it's almost like you need that new manner of thinking. I describe it as kind of seeing around corners, like that age segment just knows what the world is going to look like in 5 and 10 years. Whereas, we all like don't see the world that way anymore, if that makes sense. But it doesn't, but there are certain businesses, like if they were going into like, enterprise resource planning, ERP systems for the enterprise, that's probably not the best place for a teenager to try to mess around.
So you think it makes the most sense when it's something that's like, they have an insight or an industry is like obviously going to look radically different. And you're like, holy shit, this is like the craziest thing I've ever heard. And like, it could work. Like this could be, you could be the kid to do this.
And then, look, like there's a reason why Marines are 18 years old, is like they charged into battle. And, that energy is, and like fearlessness is pretty amazing to see.
Yeah. Like I think when you think about like Facebook, like we were talking about earlier, like there was 15 other social media companies. It's like any rational person might say, I should find a different market with fewer competitors, I guess. And so aside from just investing in people dropping out of high school, any other areas you're really interested in right now at A-Star?
Well, we're generalists, so we try not to like take sides to say. We're just like looking for those extraordinary people, and that has brought us to, everything from like all the AI application layer companies, with Decagon is exemplary of that, to I mentioned WAP on creator services that isn't AI oriented, to general biological, which is where Abi is a graduate from Yale at age 21, and he's a chemist that is really building this industrial biotech company. So instead of using petroleum to make chemicals, he does this with sugars. And there was like a kind of wipeout in the market about 5 years ago, 10 years ago, with a number of companies that didn't make it, and how the market has changed and how things have evolved. We think this is the right time, and he's the right person. So he just bought out of, quasi bankruptcy, a factory in Louisiana to make his product, which is interesting. And then we're on the defense side. We're in companies like Mach Industries, which is like propulsion-based drones. That was started by an 18-year-old dropout of MIT, or Neros, which is a military drone business.
And I think you also have incubated some companies too, maybe more than I know of. Is that also kind of a part of the strategy, or is that more of like it's kind of been a one-off thing?
Yes, we've incubated 3 companies in the 5 years that we've been around, and we try to be very thoughtful and deliberate about the incubations. So we're not like churning them out every week.
There's some people that do.
I guess what is it like? I guess you have more chances of success with higher numbers, perhaps. But our first is a company called Multiply, which is AI mortgages, and that's backed by Mamoon and Kleiner. The second is a company called 15th, and that is a kind of AI-powered tax accountant. So you get your tax return done
on the 15th of the month. Is that what it is?
That is, yes.
Oh, okay, nice. I mean, that's a nice name.
And then my kind of like little darling incubation has been Sauron, which is home security.
Yeah, I wanted to ask you about that. So what's the thesis there? Because some people might say that sounds super boring. Market might not be that big. Like, I don't know. What makes it interesting?
Well, the notion behind Sauron and the home security market is just we haven't seen innovation there. And, maybe it was Ring 10 years ago. There's just not a lot of change. Like the companies that were in the space they've been like gobbled up by the, big players there. And there's in the big players, the oligarchs have this, kind of third rail of privacy where they can't do aggressive things like face recognition and so on. And of course we can, and we are, but we're really, what we saw was that over the last like 2 decades, you have had, $100 billion plus put into self-driving. So all the different sensors have come down dramatically in price, all the different, like the perception stack, a lot of innovation has happened there. And so like take the self-driving stack and move it over to home security. And, we think that's pretty exciting.
Yeah, because I guess I kind of think about, I did have a home security system for about 2 years. We lived in the not greatest neighborhood, and we had a baby. So we were like, we should probably get a system. I think we used a company called Simply Safe. I don't know if they're still around, but I think it was like most affordable / seemed like the best option. And then it seemed like, I think Comcast had like a home security, but it was basically like a bundle with your cable bill. And I don't know, product never seemed that great to me. I think like AT&T maybe had one. ADT maybe was a big player. They were really expensive and didn't seem that great. Kind of your classic big conglomerate, price increases, etc. So, and it was all like no tech. Like it was like you'd have like a box on the wall right next to the door, and then there would be like a motion sensor on the door. And like if the door opened, you had 30 seconds to like press a button, and then the alarm wouldn't go off or would. And I think maybe there was an app, if I'm remembering right. Like, yeah, you could maybe control it remotely from an app, but it just like, didn't seem like people were doing that much with it, to your point.
Yeah, it's interesting. In some cases, maybe the innovation failed as it settled into, as a number of the assets you mentioned settled into private equity, or again into the like big tech oligarchs. But all of them, like what they don't share is like the kind of real time nature is that who's really like, is somebody going to come if there's truly an emergency? And you described the sensors at ADT. Well, that alerts their help center, but it doesn't mean the police are going to be dispatched because 90% of the time it's a false positive. Somebody's set the alarm off by accident and they call to confirm and go through this. So what we're trying to do is like have that situational awareness, like be able to, see what is happening in real time and have, high resolution sensors to, know if there's an urgent situation.
Wow. So depending on what you sense, you might just call the fire department. And so it doesn't even go to the Sauron help center. It just goes straight to calling 911 saying there's a fire. We need someone in the house.
Will it always be, kind of confirmed by people, the help center? It's kind of like self-driving where you had humans in the loop. So we have humans in the loop, and ours are very well trained. Many are like, actually, I think all of them are military veterans, and a lot of them had executive protection and so on. And, they're there, that you're not paying 20 grand a month to have a security person on site. You have this virtual security. And over time, as we train the system, the computer vision will allow us to kind of scale many more homes, and not have 10,000 virtual guards.
I know we were talking about this before we started recording, but it's kind of like, it's like a way to get into someone's home, right? Like it's like almost like land and expand. Like people spend, the average person, their biggest line item on their monthly budget is their home. And it might be like rent, mortgage. If your home is paid off, you're just like buying shit for it, basically. Like you're upgrading stuff. So it's like an interesting way to just kind of like get into that kind of budget of a high percentage of someone's income, honestly.
Yeah. We like to even think, as we wouldn't trust, like, what would it look like to have Sauron sensors in the home? It'd be something like, where did I leave my keys? Or where's my blue sweater?
That would be amazing. I run into that problem daily.
Yes. Or catch your child's first steps, your baby's first steps.
Yeah, that'd be awesome. The thing I like can't wait for is, so like I make my kids breakfast every morning, and there's so many mornings where we're like out of peanut butter or out of oatmeal or yogurt, and it just like turns into like a disaster in the morning because like they don't get the yogurt they thought they were going to get, and you're like trying to figure out what to make them for breakfast. It'd be awesome if it's just like, hey, we placed an Instacart or Amazon order, and just there's going to be peanut butter that shows up tomorrow. Like that'd be amazing.
What's your go-to breakfast in the morning?
For me personally, or for the kids?
For the kids.
For the kids, I have one that likes oatmeal, and I have one that likes yogurt, and specifically vanilla yogurt. And so the oatmeal one she'll have like strawberry yogurt, she'll have oatmeal, whatever. But like the one that only likes yogurt, she will only have vanilla yogurt. So if you give her any other flavor, she completely loses it.
What, can you put fruit in the yogurt or like nuts or anything?
Yeah, you can, but it has to be vanilla flavored. So like if it's vanilla yogurt with like cut up blueberries and strawberries, she's fine. But if it's strawberry flavored yogurt that has whatever else in it, she just doesn't, she like won't eat it.
Is that the 9-year-old or the 5-year-old?
It's a 5-year-old, you know. She's gotten so much better over the past year, like trying different foods. And I mean, huge credit to my wife of like being super patient and like, you know, strategically introducing different foods. And we always encourage her, like we make it a big deal of like, oh, you tried, beef, or, you tried green beans or something. And, we make it a big event and celebrate it. And, we make it, because I don't know, for some kids, she used to be really good at eating. And then suddenly she's just decided she doesn't like anything that's green, which is basically no vegetables, which is, not good.
Is it an age thing? It's just like all of a sudden, yeah, there's, what they say is that I think they say like at a certain age, you become very picky about food because you don't want, the 4 or 5-year-old to like walk out in the woods and just pick a mushroom and eat it and drop dead. And so it's actually a like Darwinistic thing because our 16 and 11-month-old daughters, like we were feeding them, broccoli and salmon and like just the best food. They're eating everything, like they're just taking like down stuff. And now I'm like thinking forward, like, oh God, yeah.
Probably the funniest thing was both my kids really loved sushi when they were babies. And it got really expensive. Like, they wanted sushi every night. And it's like, and still when I'm like, hey, let's go out for dinner. And they always want to go to like the most expensive sushi restaurant. I'm like, we can't go out to get sushi every night. Like that's like, a 6-figure run rate on like the dinner meal for the family. Like we can't do that.
But it's like a conundrum. You want to get the high end sushi too. You want to get the nicest fish for the kids, but you can't like go every night.
And we've like evolved. So like when we used to do date night, when we were like, first married, you're like scrapping every penny and we'd go to a place where we could like split a meal, right? You could pay like $20 and get like a really nice dinner. But it's super fascinating. Like the past couple of years, I think it's like we make a little bit more money, but also the price of everything has gone up. So like there's almost this like relative difference of like before, family meal was like $50 and like a really nice meal was 100. And like the difference in price was like 2x. And now the family meal low quality is like $100 and the really nice meal is like 150. And like on a relative basis, just getting the better food, it like actually seems cheaper. So what we've been doing is we've just been like, you know what, if we're going to go out to eat, we're just going to go to like a nice place and we're going to enjoy it because it's actually not that much more expensive than going to the, like we'll go to Shake Shack and it's like $100 for the family. And I'm like, what? This is insane. Like, let's just go to like the fancy, fine dining and pay $150 for the family. And it's like way better. And the kids like it a little bit more.
That makes perfect sense. Like Shake Shack probably has like 17 MBAs figuring out like how to keep pushing the price up.
And Shake Shack is good. I love Shake Shack. It's like a family favorite.
Yeah. It's who's the famous chef that's behind it?
I don't remember his name, but he's got the book. It's like Tabletop Manners or something, or it's like how to treat your employees really well, and like that leads to a good business, I think. But I actually wanted to ask you. So you have 2 older daughters, but you mentioned you have two younger daughters. So how did that come about? I think you described it as like your second cohort of children.
Yeah, a second cohort. A nice antiseptic term for like our like child rearing.
Cohort analysis. You're running like spaghetti charts and analyzing
Cohort 1, cohort 2. Keep up on their growth curves. So we have 4 daughters, 17 years old, 13 years old, and then 16 months and 11 months, which is like the most confusing thing to most people.
Yeah, 5 months difference. You're like, how did that happen?
Yeah. Julie and I just decided like we weren't done and we were kind of exposed to all this different tech. And so we decided to kind of like have 2 more babies, or should I say like cook up or, like grow 2 more babies to create with science, 2 more babies. I'm I'm an angel in a company called Orchid. Noor is an amazing founder, and that's like a full genomic test for babies, for embryos, something that just hadn't existed before. So we were able to see like this like fine grain resolution of all the embryos that we chose from. So I don't know. I think it's it's a little bit costly, but I would imagine in 10 years time that as the prices of all this cost of all these go down, that you'll have a lot of different families having kind of later in life children.
So how does this work kind of practically? Like if I was going to go through this process, do I so what was it like kind of from the like beginning to end? Can you just kind of explain how it works for somebody? Because I'm curious, but I've never done it. So I just
Yeah. Well, we first, like, one would create like the embryos, like you need sperm and egg, combine them
in like a lab environment of some kind.
in like IVF style, combine them, and then like freeze them and keep them on ice. And then you have, kind of optionality. And that was relatively inexpensive versus some of the other areas. The next component there is that you do need a surrogate to, carry the baby to term. And that seems to be growing in popularity. In the US, the Wall Street Journal reported that I guess there was some foreign national who was trying to have something like 100 babies with surrogates. And so,
yeah, I saw the headline.
Yeah, I foresee regulation coming in the area, and it's probably a good idea because, there's kind of scary things that can happen on both sides. And once that happens, then, it's the surrogate that is going through the different checkups and making sure everything is healthy. And so, I mean, I described a relatively simple process, but ours took quite a long time to get everything together properly.
So you mentioned you get to see the embryos, and does it like simulate kind of what might happen to the baby in terms of like, I don't know, how they like grow, health things? Like what all do you get to see when you're kind of getting like all the data around it?
It's like it's like it's really describing traits. And I should probably like pull the report back, but there's this dystopian sort of like concern that you'll choose babies based on IQ, and and honestly that can be done to a certain extent, or these like traits can now be like you could pick embryos that have certain traits versus the other, but you're looking for a healthy embryo that there's not some significant disease or the like.
So the main thing that you get from this is it says like there's a percentage chance of like this thing, and you're kind of looking for like the lowest percentage of there being some kind of like life-threatening or very debilitating issue that will come up throughout the course of the baby or the child's life.
Correct. And like a one thing, like a embryo, if the embryo has like a BRCA2 gene, there's that very high likelihood of breast cancer then occurrence.
So then you would say like, okay, let's try to select one of the embryos that just has lowest likelihood of probably like as many things as possible.
Exactly.
Yeah, because I think, I mean, if you don't have kids and you're listening to this, me and my wife were just talking about this the other day. Like, literally, our worst fear is something happens to the kids, like something that we can't control. And so, I mean, it's like, I feel like it's most parents. It's just like, you really just want a healthy kid. Like, it's not even like I want my kid to be the smartest in the world. It's just like I want them to have all the opportunities of everyone. And like the worst thing you want to do is like you have a child who struggles with something that's kind of like outside of their control. So I don't know. We've thought about that a lot. It's like our worst fear. Like it's just like your kid is hit with something that like is uncontrollable. So I don't know.
Yeah, I recommend like any couple just also like, yeah, create and freeze a bunch of embryos and yeah, and then be able to like have some degree of preventing, these bad things from happening by, um, you know, being able to have this higher fidelity look at the embryo.
Our mutual friend Navya, who works for you at the moment, mentioned you've been getting really into art lately. I was like, what's something I got to talk to him about that he's probably, might be interesting to get into. So tell me about like, what's your favorite art piece of everything that you own?
Well, I mean, first, I have a mentor, Michael Ovitz, who is like just this incredible collector. He's collected since the like late 70s. He was the founder of CAA. And so I have him, and he's very shrewd in how he collects and how he conducts business and so on. And so it's been great to have him, help me or provide insights. And then I also collect alongside with Ramtin Naimi from Abstract, whose fund is just a block away. And so we get this like kind of fun little competitive element to, like collecting. Although I don't know, I have to admit, I think he's has an incredible eye and he's like done a great job. But I would say like I'm into this. There's this group of artists that have they came out of Yale in like the mid '80s, like John Curran and Lisa Yuskevich and others, and they've been out of vogue in some regards, like from like art goes through this in and out, sort of thing, and I just love their work and see it as an opportunity to build the collection more.
So do you, when you're investing in art, or do you see it as investing? Like you're trying to buy things that the value will appreciate, or is it like this just kind of looks cool? I want to put this in my house. I think it would look nice, like on the vase on the table or picture on the wall. Like how do you think about it?
It has to be both. So I have to love it, and I want to believe that the artist, him or herself, is something very, very special. That kind of like those very few entrepreneurs that in this case it is producing something that's going to stand the test of time, and that's represented by the appreciation over time. Interestingly, over the last 5 years, we've had this terrible market, like where everything has, like art has been overlooked, kind of hit rock bottom relative prices. And so, I don't know, Ramtin and I think it's a great time to like
scooping up new pieces.
But it looks like, just as expected, with the super cycle that we've entered, the art market's starting to pick up, and just in the last like couple quarters, you're seeing like pretty astounding records happening in the auction houses and elsewhere.
So how do you get into art? Do you have to have like a broker, or do you like like email the contact email on like one of the auction houses? Like how do you get started?
It's a very particular space. So the best thing to do is to go to the major art fairs. Art Basel in Switzerland is like sort of the major one over the summer. And there, all the galleries gather together and bring works from their represented artists. And, in like, then there's Basel, Miami just happened. And they tend to be a scene and a lot of parties and things of that nature. And then you build relationships with the galleries. So like Gagosian is like a very well-known gallery. Larry Gagosian has been, running his gallery for, 3 or 4 decades. And he is they probably sell like a couple $1 billion worth of art a year, which he takes a nice cut of that.
A nice cut. Yeah. It's going to be a good business.
Yeah. But I have got a representative over Gagosian that, will help me, or if something comes into the gallery, they'll share a PDF, of a particular artist. Like they represent John Curran, for example. And then the other piece is Christie's and Phillips, and on the auction house side. So that's interesting to see where prices are happening, and it's great to have friends at the auction house that also can give you insights at the same time.
Yeah, I'm probably not quite there yet where I can start acquiring art, but I want to. Hopefully soon. Need some liquidity on the venture portfolio first.
But you can start like, local artists, or, some of the, like, you try to get somebody coming out of art school.
Yeah, that's true. Maybe, plus it's like pre-seed investing in art, like, buy something for $100 versus 10,000. It's like investing early.
Exactly.
Well, this has been a lot of fun. Thanks for doing it. Where can people find you? Do you tweet, LinkedIn? You don't have a podcast? How can people follow you?
Twitter and LinkedIn are fantastic, and DM me. But love doing this, and thank you so much, Turner.
Yeah, this was a lot of fun. And I hope you had fun. Thanks again to Numeral and Flex for supporting this episode. If you missed it, make sure to check out last week's with Jason Kalkanis, going inside the All In podcast and everything he's learned from Elon, Oprah, and Travis Kalanick. Tune in next week for Remote.com co-founder Marcelo Lebre on building one of the largest companies in Europe. If you like this conversation, please like, comment, subscribe, and name your next child after me. If you don't want to miss a future episode, subscribe to my newsletter, The Split, linked in the description, to get each episode plus a transcript emailed directly to your inbox every week. Thanks again for listening. See you next time.